My name is Andrew Stotz, and I want to welcome you to this discussion about the performance of the all-weather strategies here in beautiful Bangkok, Thailand. I'm at my home office. Hopefully you're at home, or maybe you're sitting in the car, or you're still at your office. I appreciate you're here, and I appreciate the questions that you ask. I'm just here in my beautiful little office down at Sukhumvit Soy 12, and my mom's in the other room having her dinner. I brought her a pizza from Pala Pizza, which is at a Soak intersection, one of my favorite pizza places, and hers too. So she's super happy, and here I am talking to you. What I want to remind you is that this is a chance for you to ask any questions that you have. I really welcome questions. So, why don't we get started? And this is a update on the strategy for the performance for January of 2026. So right now it's February 12th of 2026. Let's go through a little bit of this, and I'm going to come out. I'm kind of excited for today because I've got two new things I'm going to share with you. One of them is from the teachings of my professor, Dr. W. Edwards Deming, and another one is 14 reasons why Thailand is not the sick man of Asia. So let's get into it. At Phenomena, more than 7,500 followers have entrusted our strategies with 8.5 billion baht. It's a responsibility that we take very seriously. Also, the AWS RMF has already attracted about 125 million just from starting right at the end of last year. This RMS is based on the same all-weather strategy that's available at Phenomena, but executed through US-listed ETFs. Stotz Investment Research is a research provider to Thales. We're not the fund manager. We don't manage it. We give research to Thales. Remember to ask your questions in the chat. I love questions. And let's meet in person in Bangkok. Tuesday, February 24th, I'm going to be talking about doubling the profits in your business by leading teams to high performance. Talking about trust, accountability, collaboration, and building a high-performing, resilient team. I'm going to be doing this at the School of Management at Asian Institute of Technology right there at a Soak intersection. So scan the QR code to book your seats. The seats are very limited. We had 50 people attend the last ones, so make sure that you book yours now. It's free. Now, our allocation strategies are global, long-term, and diversified. Diversified across asset classes, regions, countries, sectors, factors, and companies. I want to always revisit this question of this point of remembering why we're here. We're here to build wealth over the long term. We aim to deliver reasonable returns with reasonable risk for an unreasonably long time. That's me when I was a kid. That's me when I came to Thailand. I was 26. In that picture, and that's me when I'm 100. Now, our aim is to create strategies that perform over many decades. My dad retired at 58 and lived to be 82. He and my mom had 24 years of a happy retirement. There they are at their wedding day. And there they are, one of my favorite pictures towards the end of my dad's life. My mom has now lived comfortably with me for 9 years, not having to worry about money. Think about living at least 3 decades after you retire. Mom's going to be 88 in April. And that's why I say long-term is decades, not years. That's mom and me at El Mercado, one of her and my favorite restaurants here in beautiful Bangkok. And there's mom. She came to a Phenomena event to listen to her son. She's like, look at my son. He's up there. And for some people, wealth and long-term is over generations between my mother's and my father's parents and their parents and my parents. Wealth, hopefully in your life, grows over time. Our goal is to deliver steady returns over the long run. Those are our 3 strategies. And if we look at them each from their starting point, AWS has had an average annual return of about 9.8%. And all-weather Alpha Focus, which started, the blue line started in a rough market, so it came down quite a bit, has got an average annual return now of 7.1%. And all-weather inflation guard has had an average annual return of 5.9%. Now, since the start of 2025, the strategies have performed as expected, with all-weather alpha focus, which is the higher risk strategy, on top. And AWS is in the middle, and all-weather inflation guard has had the lowest return, but also the lowest volatility. We're not shooting for the stars with all-weather inflation guard. We're trying to slowly grow that money. All-weather alpha focus and AWS have also beaten world equity, which is pretty fantastic over the period of time from 2004 till today. And of course, as I mentioned, all-weather inflation guard has much, much lower volatility. Now, we mix asset classes rather than hold pure equity to try to avoid a portion of the equity market downturns that you can see in the brown line there. But it can also mean that we miss a portion of market booms. Now, we revise our strategies every 3 months, and we are here. We are approaching our next revision. Before we look at the performance of our strategies, I'd like to share one of the greatest lessons I learned from my greatest teacher, Dr. Deming. There is Dr. Deming on the left and myself on the right. When I was a young man, I was 24 in that picture, and Dr. Deming taught me to differentiate between signal and noise. Dr. Deming was the father of the quality movement. We are experts at differentiating signal from noise. Now, in order to explain this, I wanted to show you, this is the month-on-month percentage change of the World Equity Index. We can see from this, I'm going to just grab my pen here. You can see on this that we did have some extreme highs that were above 10% on a monthly basis. That was in 2020, but we also had an extreme low. This was COVID, March of 2020, and then this was later in 2020. And actually, we've been going through a period you can see where volatility has actually tightened quite a bit. This gives us a picture of what type of volatility there is with world equity. Now I want to look at 60-40 when we blend in bonds with stocks. That's the benchmark. And you can see this is equity, 60-40. Equity, 60-40. Equity, 60-40. You can see that when we blend in 40% bonds, the returns become much more bounded, right? Maximum is about 7, minimum is about 8. Finally, let's look at all-weather inflation, all-weather strategy. So again, world equity, 60-40 benchmark, and here is the all-weather strategy. All-weather strategy has the volatility of 60-40 on a monthly basis, and it's got a better return, in fact, than the benchmark. The benchmark of 60-40s over this period of time has had an average of about 5.6%, but AWS 9.8. That's the cumulative average growth rate. Now let's add a simple average line. Here we can see an average of all these monthly movements, and we can see, in fact, it's just slightly above 0. That's world equity. And that just tells us that about, let's just say we earn about 2% maybe on average in the market each month over that period. 60-40 benchmark is lower. As you can see, it's closer to 1% average annual return each month. And now let's look at all-weather strategy, which is showing a little bit higher, 2%, roughly 1.5% return over the past, since inception. Now, why am I showing you this chart? This chart, as you can see, is over time. It's a run chart, we call it. And this tells us what's happening as time passes. And we're seeing a lot of ups and downs during this period. But now I want to talk about adding a 2 standard deviation above and below line. Dr. Deming taught that about 94% of the variation of the output or outcome of a system is common cause variation. In other words, 2 standard deviations above or below. And there I have now put in a 2 standard deviation above and below line for world equity. And we can see 95 roughly percent is, for those of us that remember our statistics, can think of a normal curve. And we can say that 95% of the outcomes, right, fall within 2 standard deviations from the mean. And that tells us that it gives us a picture that these small changes around here, even if they're up and down all the way to these lines, these changes are just normal variation. Don't panic. That's what I'm trying to talk about. Here we can see the 60-40 benchmark, and finally, the all-weather strategy. We can see a tighter level of volatility, and we have had actually a breakout, which is pretty incredible. So what is this all about? Well, I talked about this in chapter 5 of my book, Transform Your Business with Dr. Deming's 14 Points. And the reason why I'm talking to you about it is because the reason why is because it's a great way to understand how I try to reduce the chance of getting panic selling or rushing into buying and the like. And that really helps me, what I learned from Dr. Deming. All right, let's look at some of your comments and hellos and any questions, and then I'll get back into the presentation. I hope your mom enjoys the pizza. Yeah, she loves it. She likes artichoke and mushroom. But what she's really going to enjoy is the pistachio ice cream that I got her. She's really excited for that tonight. Kid says, I have a question about AAWS and AWAS. Yes, feel free. If you want to ask that question, feel free to ask it. Is TLAGEQ perform as good as AWS? Well, remember that TLAGEQ is a global equity only, just global equity. And so it's going to have a different profile than all-weather strategy, which is stocks, bonds, commodities, and gold. But the performance of GEQ has been pretty good, and GEQ is a portion of the equity that we have in the strategy. Peter says, good day. Yes, good day. It is a good one. Thank you. And TT says, Sawadee krap, Ajan, Sawadee krap. Rainer Michael Press, good to see you. Yes, talking about Dr. Deming is my fun start for today. Ming, good to see you. And I really like your comparison graph, World 60-40 and AWS. Yeah, I mean, it's called a run chart or a control chart in the world of statistical quality control or in quality, but it really helps me to understand what is something that I just really shouldn't stress out about, and that is what's called common cause variation. All right, let's go back into the presentation, and I'm going to share a little bit more. Let me go into that 1 second. Whoops. Okay. So we're going to go through the strategies. All-weather strategy gained 8.1%. It's an incredible month, January. All-weather alpha focus gained 7.1%, and all-weather inflation guard gained 2.8%. We're talking about in 1 month, the month of January. Now, I'm going to come back to you for a second, and I'm just going to just go back and talk to you. As I always say to people, you love me now when the market's going up. But you have to remember, it's not always going to go up. And we've been working on some things I want to show you in the future of how we can reduce risk as we face the risk of eventually markets will come down. So the point is, accept the fact we've had a great month, the month of January. But also remember, an important thing is that when we rebalance the portfolio, remember I showed you that we're rebalancing in March. When we rebalance the portfolio, we're trimming our gains out of the winners, and we're allocating that to the underperformers and reallocating it, basically. It's a way of when you regularly rebalance on a consistent basis, you end up actually doing pretty well. And so that's what we're doing in that. All right, let's get back to the presentation. And all-weather strategy has 70% in equity, 5% in bonds, and 25% in gold, and 0 in commodities. And the question about GEQ, that is this portion, 15, which is a steady amount of global equity. That means that our bets or our tilts in our portfolio are going to be these 4. Now, since inception, the strategy was up 89%, and 43.8% above a 60-40 portfolio. We've just taken off like a rocket. And in January 2026, the strategy was up 8.1%, which was 7% above the 60-40. What a great way to start the year. And our 25% allocations to gold and emerging markets ex-China outperform significantly. And world equity, the GEQ, also outperformed, which we're happy relative to the benchmark. And China did well too. So it was actually a pretty darn good month, one of our best months. Our 15% US tilt was a drag, but still 15% to the US is tiny compared to a traditional global portfolio. Now, since last revision, the strategy was up 9.9. So now we're talking about quarter to date return, not the month of January, but basically the 2 quarters that we've been in existence with this portfolio since we rebalanced. So it's up 9.9, which was 8.4% above the 60-40. Again, allocations to gold and emerging markets ex-China drove the massive outperformance. US, again, was a drag. So here we can see the strategy added 6.9% value compared to a 60-40 portfolio in 2026 year to date. Now, I try to calculate this by after fees. Fees matter a lot, and I'm trying to keep them at a reasonable level. And also remember that past performance does not give any indication of future performance. Now, the strategy beat a 60-40 portfolio by 6.7 in 2025. And incredibly, we're at 6.9 right now in 2026. Let's talk about the all-weather alpha focus, which gained 7.1%. We're at 93% equity, bonds at 3%, and 4% in gold. So, in fact, thinking about how strong gold has been, and we only have 4% in gold in this, we've done pretty well, I would say. Now, since inception, the strategy was up 31.8%. And that's 22.7% above a 60-40 portfolio. And 5.4% above world equity with a lower drawdown. We can see the green line, particularly the green line right here collapsed, and our strategy didn't collapse as much. Now, in January 2026, the strategy was up 7.1, which was 6% above the 60-40. And our 22% tilt to Latin America outperformed massively, and our 20% tilt to precious metal miners and 4% in gold drove further outperformance. So we did actually have gold exposure, but just that it was mainly through miners. And our 22% tilt to Vietnam, darn it, Vietnam did not add value in this. Actually, you can see, though, that it did actually, Vietnam was at 2.5, which was above the 60-40 portfolio, so it wasn't terrible. Now, since last revision, again, this is Q to date, quarter to date, strategy was up 7.9%, which was 6.4% above the 60-40 portfolio. Again, our 20% tilt to precious metal miners and 4% in gold were the biggest outperformers. And our 22% tilt to Latin America and outperforming world equity fund helped further. So the strategy added 6% value compared to a 60-40 portfolio in 2026. The strategy beat a 60-40 portfolio by 9.1% in 2025. Now let's wrap up by looking at all-weather inflation guard, which was up 2.8%. Now, inflation guard is very low on equity and high on bonds because this is a low-risk strategy. This is for people who have money in a bank and they think to themselves, I got to get some exposure in the markets, but I don't want to risk it. And therefore, you go for something like this. Since inception, the strategy was up 21.8%, which is 11% above a 40-60 portfolio. The strategy has also experienced less volatility than the 40% equity, 60% bond portfolio. Here we can see in January 2026, the strategy was up 2.8%, which was 2% above the 40-60. And our tilt to gold drove the massive outperformance. The World Equity Fund also outperformed during that period. And TIPS outperformed global bonds. Now, since last revision, this is what really matters. It's the Q-to-date return so far. The strategy was up 3.2%, which was 2.1% above the 40-60 portfolio. Gold and world equity drove performance. TIPS and money markets did better than global bonds. The strategy added about 2% value compared to a 40-60 portfolio in 2026. And the strategy beat a 40-60 portfolio by about 0.4. So it wasn't it was a great year for performance, but for outperformance relative to the market, 2025, we were about in line with the market. So before I go into the 14 reasons why Thailand is not the sick man of Asia, let me see if you got any questions. Any questions, feel free to ask those questions. First question, hold on. Japanese USA bond market risk and its potential impact on all-weather strategy. Well, we have a global bond fund, and so basically there is risk to the strategy. I think Trump definitely wants to get interest rates down, and my prediction is he's going to get them down close to 1% by the time we get to the election. If he can get interest rates down to, let's say 2% as an example, falling interest rates is going to cause bond prices to rise. So that would be good for the strategy. Now, the second thing is that it's possible that interest rates stay high or even rocket up further, and then we could lose on that portfolio. Our bond portfolio duration is about roughly 5 years, I think, at this point. And so therefore, though we will have volatility in the bond fund, I'm not so concerned about it because it's going to be, generally, it's been pretty low. And Japan, I don't have much to say right now on Japan. It's not in my focus, but for the March monthly portfolio rebalancing of AWS and AF, how significant do you expect the allocation changes to be? Which assets are likely to be reduced or added? Oh, that's a very cheeky question. If we want to talk about ethics, one of the things in ethics is that you can't reveal changes that you're going to make selectively. I've got to reveal them all at the same time. Now, my client in this case is not you guys. My client is Phenomena. And so what I try to do is get that strategy to Phenomena and let them go through it, make any final questions, changes, recommendations. And then once they've done that, they're going to notify all of their clients at the same time. So you'll find out when everybody else finds out. But more importantly, to answer this question, kid.45, part of the answer to this question is I don't know. Because you remember that chart that showed the signal and the noise. There's a lot of noise. I don't pay attention much to the noise. But when the March rebalance period comes, I have a huge focus along with Alex and Sorensa to say, okay, what are we going to be doing? And so I won't even know the answer to this question until we get to the end of February. So Peter C says, I have a question. For now, I have 30% in Thai stocks, 12% in gold, 10% in Hong Kong stocks, and 48% cash for the rest. Would you recommend how many percent that I should invest in AWS port? Well, first thing, I just want to clarify that I'm not an advisor, so I'm not always the best person to ask. And I don't give advice to individuals, but I'll just talk briefly and generally about what I see, what you're talking about there. First of all, we're going to talk about Thailand in just a minute. I've basically been out of Thailand, and AWS has been out of Thailand, for many, many years. But I do think that at some point, Thailand has a chance to turn around. So 30% is not an overexposure or a home country bias. So I don't think that you're, in trouble there. I think that's probably okay. 12% in gold, that's pretty reasonable. I mean, if you go back 5 years from ago, someone would say nobody's going to keep 12% in gold because gold has never consistently beat equity, or very rarely. So generally 12% is, I would say, is reasonable. Going really high in gold like we do with the all-weather strategy up to 25%, there's risk to that for sure. And we monitor that very, very carefully, and we can reduce that very quickly. 10% in Hong Kong stocks, I don't know why you got to have Hong Kong stocks. In my opinion, it's not that great. Now, the 48% in cash for the rest, it kind of depends on why you're having that cash. For some people, they have plenty of money and they don't need to invest it all and have it all grow. so they can be conservative and have money in the bank. Now, if you're saying, I'm holding that cash to wait until the markets come down and then I'm going to allocate it, that's possible. Market timing. Sometimes you can do it and it works. Sometimes it doesn't work. Now, in relation to AWS, let's just talk about the typical person. In fact, I had dinner last night with a friend of mine, and she's been investing in AWS for a while. And so she was asking me somewhat of a similar question, like, should I put some in all-weather alpha focus? Should I put some in some other funds or some other strategies? And my answer to her was, why? You know, it's so hard to perform in the markets. My team and myself, basically, we work 24/7. We're always thinking about how can we improve our performance. And even for us, it's super hard. And the result of that is that I would say market timing, as I told her, I wouldn't try to time the market. That's what we're doing in the all-weather strategy. So no point in trying to switch into this one or that one or another one. And then the other thing I said to her, she's about a 30-year-old female. She has a pretty good career and she makes good money. For her, really, the main thing is get on with your business of making money and use the all-weather strategy. As I said to her, is use that to start building your wealth. We're rotating through different asset classes. So in a sense, we're doing market timing. If you try to do your market timing and our market timing, generally it doesn't work. Kid says, for a lump sum investment into AWS or AF, would you recommend dollar cost averaging or investing the full amount at once? I'm seeking the highest confidence approach. Okay, so here is absolute definitive answer to this question, kid. Lump sum investing is always superior to dollar cost averaging if the market is going up. There's no way dollar cost averaging can beat lump sum investing in an up market. Let's say the market's going to go up over the next 10 or 20 years. It has gone up, let's say over the last 20, 30, 50 years. It's always going to be better to have money in the market right at the beginning and let it grow the whole time. Dollar cost averaging is going to put that money in over time. So that's the definitive answer. But let's go a little bit deeper. The first thing is that many people don't have a real lump sum opportunity. What they get is monthly income that they invest. And so when we compare lump sum versus dollar cost averaging, it's really not a comparable thing because most people aren't going to be able to make that choice. The second thing is, so therefore, most people are just going to do dollar cost averaging. And there's nothing wrong with that. The difference in return is pretty small, but it depends on the level of the amount that the market goes up. So dollar cost averaging is a fine way to invest, and it's probably the way that most people end up investing because they don't have lump sums. And even in your case, kid, you may be thinking, yeah, I've got a lump sum. What do you have a lump sum of? Let's say you have a lump sum of $1 million baht, right? Okay, but that's not going to be your whole wealth, and it's not going to be your whole wealth over your life. So you're not really doing lump sum. You're just taking one portion of your cash flows to invest. And I would say the only problem with lump sum is you have to be prepared that if you put that money in, it could go down by 20, 30, 40%. And you'd have to be ready to stomach that fall and survive it and then come out, because the markets, individual stocks don't always bounce back, but markets do bounce back unless we're all screwed if the markets basically don't bounce back. So hopefully that gives you a little bit of an answer. If you got more questions, just ask it in the chat and I'll try to answer. Duk Dika says, just invested in AWS on January 29th before gold price drop. Plan to invest more in AWIG. Is it a good time or wait for gold price is stable or uptrend, though gold is only 10%? Okay, so the key thing here is, remember, we're doing market timing. And that means that we're depending on what's happening with prices, with fundamentals, valuation, momentum, and risk, we're switching around different asset classes. So I would say the first thing is don't get too hung up on trying to find the perfect time. Set a schedule to invest on a regular basis and just do it. That's dollar cost averaging. And that just keeps you on track. That's my first thing. Now, you may say, but Andrew, the market's so high. I don't know. Andrew, you're doing market timing to some extent, but I'm not sure if that's going to work. So I'm going to do market timing. I'm going to keep my money out of the market right now because it's so high, and then I'll put it back in. Well, now you've got a problem. If you pulled money out when the market was high and it went higher, you missed that opportunity. Or if you're right and the market falls, you still have to pick the time to get back in the market. So that's where dollar cost averaging is superior to lump sum investing. You just say, I'm just going to invest every single month. And it could be that the markets go down, but I'll get in at a lower price next month. All right. Chalurm Paria Ekasut 247. What do you think about gold now? Has it lost momentum? Well, I would say not yet. But you'll see in about a month, I'll have done all my fundamentals, valuation, momentum, and risk testing, and we'll see where it goes. I have a feeling that gold could go further, but on the other hand, it's really tough because Trump's going to do everything he can to try to strengthen the dollar, I think, or not prevent it from collapsing. But for right now, I'm not sure if he's got enough levers to it. So I would say gold could continue its rise, but we'll know once I do my rebalancing. Next question. My first time joining your live, Coco, what inceptions you refer to and what is tips? Okay, so inception, for each of the funds, we started them at a different date. So inception is from the date we started the fund until today. And the inception was 2019 for AWS, and inception was later years for each of the other strategies. So we're just saying over the life of this strategy. Tips are treasury, inflation, protected securities. These are U.S. government bonds that adjust for inflation. So if you fear inflation, people oftentimes will move their money into tips instead of holding regular U.S. dollar treasuries because they're going to be adjusted for inflation, but a U.S. Treasury is not going to be adjusted for inflation. These tend to have lower volatility and also lower returns, but that's a little background on them. Okay, Tirasak J says, may I confirm whether you're responsible for selecting the, so for the Thales AWS RMF, that is Thales's fund. They are the fund managers. I am not telling them what to do. I'm not doing that fund, but I am a research provider to Thales. Thales receives my research and they make a decision. They have a lot of questions. We go back and forth. I'm trying to provide them with the research they need to make a good decision. So there's no guarantee that Thales AWS RMF is going to follow exactly what I recommend. But my job, of course, is to give great recommendations that they're not going to have doubts or problems with. So generally, you can say it's going to follow AWS, but any deviation of that will be because Thales wants to do something slightly different. So generally, it's going to follow it. You once said momentum was the most important factor for Thai equity. In that perspective, has it picked up now? Yeah, we are seeing a little bit of momentum, but what's important about momentum is not momentum today. It's momentum relative not to the past, but to other markets. So yes, Thailand is rising, but other markets are probably rising faster right now. Peter, you're welcome. All right, next question. Do you have any date in mind when you will rebalance in March? I'm planning to invest more. Yeah, so I thought in that chart, Alex, I think is listening, in that we have a presentation where we show a timeline. I thought that we had a date in that, but maybe we didn't, or a range of dates. But I'll ask Alex to share a range of dates. But I would say it's going to be probably first week of March. So just hang on. Phenomena will notify you and all that. Yep, first week of March, Alex said. 1, risk, 2, profit. Yep, reduce risk. Yep, you're welcome. And what types of indicators you use to assess the momentum factor? Well, there's hundreds of momentum factors or indicators. because we can slice it by short term, medium term, long term, very short term. We can look at momentum related to volume, price, earnings, many different factors. We test all of those factors to come up with the ones that perform best, and then that's the ones that we use. Is it okay to have AWS as the only retirement plan? Well, first of all, I don't think you would want to do that because you want to first have your RMF, your retirement mutual fund, because that gives you a big tax advantage. Now, we have AWS RMF. You could do that or any other RMF, but make sure you max out your RMF because you're going to get tax advantage. After that, I would say that, part of what I'm trying to do and what I've communicated here is that I think AWS is a good strategy to go for the long term. Now, it depends on your age and how much money you have and all of that. But I would say I've designed it in such a way that it is moderate risk and reasonable return. Rainer, Michael, thank you. Andrew, good learning and informative section. You're most welcome. I know you have a lot of knowledge in this area, so feel free to ask any other tough questions. For RMF, should I invest in only the TLAWS RMF, or should I divide it to other funds? I wanted to talk about this briefly because I told you I had dinner last night with a friend of mine, and she's investing. And we were talking about investing in different strategies and different funds. And I was explaining to her that having many funds in your portfolio doesn't really make a lot of sense. And the reason why is because each of these funds is already diversified. So if you just had one fund, let's just say you had all equity. There's a good fund out there in the US called VT Fund. And that fund is 10,000 stocks in the US and across the world. And that particular fund, basically, it's eliminated any stock risk, right? Any risk that any particular one stock is going to go down. And so the result is there's no reason to own another portfolio, another fund, because you're already super diversified. Now you may say, but Andrew, I think Vietnam's going to fly. And so, okay, well, Vietnam's already in VT Fund, but you're going to say, okay, it's only in VT Fund. Let's say actually it's not because it's a frontier market, but let's pretend that Vietnam is in the VT Fund. And if it's in the VT Fund, you could say, I want to double up my weighting by buying this additional fund on Vietnam. Yeah, that's possible. But ultimately, I would just be careful about having too many funds. Now, in the case of Thales AWS RMF, I've designed it just like the AWS. I'm providing that research to them, and I think that it's a great long-term strategy. But you could say, well, maybe I'm nervous and I want to split that up a little bit. That's possible. It's really going to be up to you. I would suggest that you talk to your advisor about that in a little bit more detail, depending on your situation. Okay, so I'm following AWS. Excellent. Well to go. Now, let's go back to our presentation because I want to go through this one last thing, and feel free to ask any questions while I go into this final part, 14 reasons why Thailand is not the sick man of Asia. Looking at the past 10 years, Thai stocks have done poorly. In the past decade, world stocks returned 282%, while the SET index only returned 49%. You want to avoid home country bias and invest globally. This is a good example of why. Now, since inception of the all-weather strategy, the SET has been flat. AWS has returned 89%, and we can see flat for the SET. Now, there was recently an article about sick man of Asia, and I got so annoyed with people repeating this that I decided, this was last Sunday, I decided I better write something about this. Now, I agree that you should avoid home country bias and invest globally, but FT calling Thailand this annoyed me. So here are 14 reasons why Thailand is not the sick man of Asia. First, a weak central government is not all bad. Limited government power restrains taxes, regulations, and intrusive controls on business. For me, I appreciate a weak central government. I know it's strange. Everybody says, I want our government to set the policy here and there. Yeah, sure. I don't believe the government can save the day, even if they're strong. Number two, a diversified economy reduces the risk of major economic collapse. Exports, manufacturing, agriculture, and tourism balance shocks across the economic cycle. Thailand is a diversified economy. Food security gives Thailand long-term economic and social stability. We are a net rice exporter, and the arable land buffer that we have in Thailand against global food disruptions is big. In other words, you can grow food almost everywhere in Thailand. Number four, economic institutions continue to function. Conservative banks, stable currency, low inflation, and disciplined public debt. Look at our public debt compared to the US, for example. Number five, reliable energy infrastructure strengthens competitiveness. You don't think about this much, but the energy grid is incredible. Private sector energy grid investment delivers near zero blackouts for industries and cities. I've lived in Thailand for almost 34 years, and I can't remember the last time we had a blackout. It is such a very stable supply of energy in Thailand. Well done. Now, number six, Thailand's transport networks quietly supports growth. We have 180,000 kilometers of highways, strong Bangkok mass transit, and regional airports. I want to just mention about this for a moment too, because I just got back from a trip. I have a friend of mine visiting from America, and he just went back to America. And basically, I took him from Bangkok to Phetchabun, and I drove up there myself. And then we went from Phetchabun to Pimai in Korat. And then from there, we went from Korat down to stay a night in Khao Yai near Kirimaya. And it's just beautiful, of course, up there. But the point is that we then drove down into Bangkok. There's a new road, right, that is been built between Korat and Bangkok. And that road is incredible. It's not completely open yet, but the portions that were open were fantastic. The road system is so good in Thailand that we don't really focus on having a train system. So let's go back and look at some more. 7 is strong execution drives performance. Innovation can limit growth. The workforce in Thailand excels within structured systems. Thai workers are actually phenomenal. In fact, when a friend of mine saw this, he sent me a message on Facebook just today. He's been living in Japan for many years. His name's Nick. And he was saying, I totally agree that the Thai workers are really dedicated, and they try their best, and they learn and they improve. So yes, there are weaknesses, but there's also weaknesses in Vietnam. Look at Vietnam for just a second. I want to talk about this because I really want us to think carefully. Don't get too caught up in the negative. I was looking at, we had an opportunity to expand our coffee business, Coffee Works, to Vietnam. And we did a lot of research. My business partner, Dale, did a lot of research. He went to Vietnam, talked to a lot of people to try to understand what's going on. And then I have my old boss from 1993. He was in town, and he lives in Vietnam for many, many years. He understands Thailand. He understands Vietnam very well. And you know what he said? He said, the fact is, you're going to have to deal with a new language, a new culture, new laws, a new political system, and you're going to have to deal with corruption all the time. Corruption, theft, all these things. And he says, and I said, in Thailand, we haven't had to deal with corruption. You can exist in a business without corruption. So before we get so excited about Vietnam and other countries, Indonesia, China, other places, the level of corruption can be very strong. So even though the workers may be a little bit better, there's all kinds of other challenges. Number 8, high quality digital connectivity supports global integration. We have super fast broadband. In fact, we're using it right now. I have almost 1,000 megabits at my home office. And I've interviewed 800 people on my podcast, My Worst Investment Ever. And many of them were in the US. Their connectivity was way, way worse than ours. Number 8, tourism remains large, resilient, and widely shared. Thais have a service mind and they spread income across drivers, vendors, hotels, and staff. I have a story to tell you about this because when I was an analyst, I had a World Bank guy come and see me, and he had been traveling around Asia. He says, I can't figure out Thailand's competitive advantage. I can see Indonesia, I can see China, I can see Japan, but I can't see Thailand. Give me the answer, Andrew. And I said to him, where'd you stay last night? He said, I stayed at the Mandarin Oriental Hotel. I said, one of the best in the world. How was it? Incredible. He said, it's really one of the best experiences I've had in my life. And I said, you've just answered your question. One of the core strengths of Thai people is a service mind, and we see that demonstrated through the hospitality sector. I want to go back to the teachings of Dr. Deming. One of the things that Dr. Deming said is be very careful about the way you incentivize individuals because you'll cause cooperation to break down. Well, the number one thing that's come from America in that area is KPIs. If you're using KPIs in your company, I suggest that you stop them today. Get out of KPIs. Think about how we can incentivize and encourage Thais to work together because that is where Thai people excel. They work together well. And that's from 30 years of experience, in that. Now, let's go back. I'm almost done, and then we're going to wrap up, and I'll take some of your questions. Let's go to the next one. Number 10, improving capital markets attracts serious investments. We have deep liquidity in our market. We have 967 stock market listings and improved governance and all of that. Now, we're going to have problems for sure. I'm not denying that we have problems. We have low profitability right now, and companies are struggling to survive and all of that. But still, it's still a very solid market in Asia. Number 11, central geography creates lasting strategic advantages. The Eastern Economic Corridor links ASEAN, China, and India effectively, and Thailand has just got great geography. Number 12, the country has stayed true to its core beliefs. Monarchy, Buddhism, family values, and Greng Jai anchor social stability. This is something, whenever we get worked up about how tough things are and it's bad in Thailand, we still have unity in religion, unity in monarchy, and more importantly, unity in family. Many years ago, I was asked to come to the SEC and talk to them about what advice would I give them about the problem of Thailand is getting old before it gets rich. And there's a huge problem about saving for retirement. And they talked to me about 401ks and different things that are going on in America. It's kind of like the RMF type of situation, and how they could apply that to Thailand. And I said, before you start applying something from America, you need to think about the fact that Thailand already has the number one, most reliable, most highly stable, most recognized system for retirement. Better than all the other systems that have been brought to this world. And that's called family. The family unity and support is a safety net. What's happening in the West is that they're thinking that we can rely on government to support us. Nonsense. It'll eventually collapse. So I said, stop thinking that government's going to provide the answer. Focus on the fact that Thailand people in Thailand have great family relationships and they support each other. Don't lose that. And it's easy to lose. So you've got to stay true to that. And I have to say that Thai people and my Thai friends inspired me to bring my mom to Thailand when my dad died and say, we can do it. And I've got amazing Thai women that work with my mom as caregivers, and they've done a great job with that. All right, we're almost done. We're almost done. There's two more. Hold on. 10, deep social capital stabilizes society. The rural family safety net absorbed returning workers during the COVID-19 shutdown and other downturns. The fact is, we have small-scale farms, and people who are in cities can retreat to their families' farms, and it provides some sort of safety net. Now, people may be losing their farms, but they could still be in their villages. Number 14, You can do business without engaging in corruption. I've operated companies for 30 years without bribery for permits or operations. And before we get into Q&A, the Valuation Masterclass Bootcamp number 24 starts on Monday. Incredible. Ultimately, it's for people that want to become job ready by writing 4 professional valuation reports in 12 weeks, learning to think and act like a pro through mentorship from me, and also confidence, proving that you can deliver great research under pressure by graduating from an intense boot camp. You get an extra $100 off by just using the Phenomena coupon code. You can just go to valuationmasterclass.com or scan the QR code. All right, I'm going to take the final question. So let me go back into the question section. Let's see what we've got here. Hold on. Pawarit Pawn says, I'm 29, based in Thailand. With the world being so volatile, what are 5 industries you'd recommend for a 15-year career path? I'm looking for long-term growth and stability. I'm assuming you're saying 5 industries for investing. And what I would say is there's really 11 industries in the world. So 5 is pretty much, all of them, but it's half of them. I would be very careful. Over a 15-year period, a lot can change. If I was you, I would own something like All Weather Strategy or GEQ or VT Fund, as I mentioned, in the US. I don't know what the equivalent is for Thailand, but I would be broad-based, diversified, and focus your energy on making money from your salary or from your business. Remember to separate, create, grow, and protect. We create wealth through business and salary. We grow wealth through the stock market. So grow wealth carefully. As a Thai, I think we're sick, but in your opinion, we are not sick, and I think we are not healthy either. How do we get healthier in your opinion? Well, there is lots of problems. I'm not going to deny that. I'm trying to present some other alternatives. But when I think about what has to happen in Thai companies, they got to figure out how to grow, and they got to figure out how to be more profitable. And how to grow means you've got to be more in tune with the market. You may have to look outside of Thailand because consumer demand may be low because of consumer debt. There's a lot that has to be done, but it's businesses, families, and individuals that are going to turn this around. It's never, ever going to be the government, and particularly the Thai government. So Thai companies' profitability, such as ROE and ROIC, is deteriorating. You think theirs will recover soon? I would say that they've been deteriorating for a long time, and now they're down relatively low. They're not at a disaster point, and I wouldn't say they're going to get to a disaster point, but I would say that we probably are going to need some more work from companies and managers to get serious about growth and about cutting costs, and that's when we'll see it return and rise again. And I think we're probably a ways away from that. It could be 1 or 2 years before we see that. Surot, thank you. All right. Japan or Thailand investment opportunities and risks you foresee. That's too general for me. I'm not exactly sure. Great summer. You're welcome. And here we have the Valuation Masterclass and the Phenomena coupon. And I'm going to wrap it up there. You say, thank you, John Andrew. Stay healthy. You are welcome. I'm going to end it here. I want to thank you all for attending today. Great questions. And I want to thank you for trusting us with our strategy that we provide to Phenomena and that they provide to you, right? I've got one more question I see just came in from Nai Tai. Says, how to invest at age 18? Now my daughter studies finance at university. I want her to learn from real investment. Well, first thing you got to do is get invested. The simplest thing for 18-year-old is buy the Thales GEQ that we've made, which is global equity. Start contributing to that until you build that up into a large amount, and then start to take portions of it. And if she wants to start playing around, buying stocks and the like, then have her do that. But ultimately, to get true wealth over time, you've got to contribute to a broad equity strategy. You don't need all weather strategy for her because she's got, 40, 50, 60 years of investing. So that would be my advice. All right. You're welcome for the hope and positive. I'll see you guys. Have a great time, and I'll see you in a month. We'll have our new strategy. Any changes you'll get to know about Thank you for trusting us. We're going to do our best for you.